In the 1870s, foreign merchants suppressed prices, triggering a crisis in the silk and tea trades. Chinese merchants suffered losses and bankruptcies, with draft banks in Suzhou and Hankou writing off hundreds of thousands of taels in bad debts. Bad debts refer to losses or deficits. Once a bank run occurred, draft banks would inevitably collapse due to unrecoverable loans. The Fukang Draft Bank, operated by Hu Xueyan, collapsed after suffering losses in the silk trade due to deception by foreign merchants. A nationwide credit crisis soon engulfed the entire financial sector. In the early 20th century, the collapse of Yingkou's Dongshenghe Consortium, a major producer and exporter of bean oil, left foreign banks, the Ministry of Revenue Bank, and draft banks with over 5 million taels in losses, including 2 million taels owed to draft banks. Foreign and Ministry of Revenue banks, which issued secured loans and enjoyed special privileges, recovered nearly all their funds, whereas draft banks, which relied on unsecured credit loans, recovered less than half. Following the Dongshenghe collapse, the Shanghai rubber stock crisis erupted, leading to the bankruptcy of the Yuan Fengrun and Yishan draft banks, which defaulted on millions in public and private funds, sparking another credit crisis in the industry. Before the fall of the Qing dynasty, the severe losses suffered by draft banks stemmed from their fatal flaw. They issued only unsecured credit loans with no collateral backing their vast lending. During the economic crises and political upheavals, the risk of unrecoverable loans was immense. Many merchant firms collapsed due to mismanagement, dragging down the draft banks that had lent to them. Each economic crisis triggered bank runs, leaving numerous draft banks insolvent and forced to shut down. Before the Qing dynasty's collapse, the emergence of over a dozen commercial banks, such as the Imperial Bank of China, Zhejiang Industrial Bank, and Ningbo Commercial Bank, posed competitive threats to Shanxi draft banks. However, their primary rivals were the semi-official Ministry of Revenue Bank, later renamed the Daqing Bank, the Bank of Communications, and the provincial banking institutions. The Ministry of Revenue Bank, with its authority to manage state funds and substantial capital, dominated the market. It monopolized the government deposit and remittance services previously handled by draft banks and exerted significant influence over their operations. In market competition, if the Ministry of Revenue Bank raised deposit rates or lowered loan rates, draft banks had no choice but to follow suit, a practice that directly threatened their survival. Despite this, draft banks remained formidable players until the late Qing era. Over time, however, their outdated business model became increasingly apparent. Draft banks dealt in deposits, loans, and remittances. As financial institutions, their growth depended on deposit inflows. More deposit meant more loans, higher interest income, and greater profits after covering deposit interest payments. Conversely, if depositors demanded withdrawals en masse and loans couldn't be recovered, the more loans a bank had issued, the faster it collapsed. Moreover, as most financial profits flowed to the Ministry of Revenue Bank, draft banks saw dwindling earnings. A leaky boat meets headwinds. Shanxi draft banks ultimately suffered fatal blows during the chaos of the 1911 revolution. During the revolution, wars broke out in major commercial hubs like Hankou, Chengdu, Xi'an, Taiyuan, Beijing, and Tianjin, inflicting losses on businesses and financial institutions. Beijing, where draft banks held 30% of their total deposits, became the epicenter of their collapse. The economic turmoil of war and revolution triggered a wave of bankruptcies. Of Shanxi's 22 draft banks, only 4, Dadetong, Dadeheng, San Jinyuan, and Da Shenchuan survived the initial crisis due to their strong capital reserves, which allowed them to weather the bank runs and maintain operations. The rest, including the once prominent Rishenchang, succumbed to insolvency. Even the 4 surviving banks lasted only another 2 or 3 decades before meeting the same fate. According to 1904 statistics, Shanxi draft banks operated 450 branches over 100 Chinese cities, handling nearly 800 million taels in transactions. Among them, the He Shenyuan Draft Bank expanded overseas, establishing branches in Tokyo, Osaka, Yokohama, and Kobe in Japan, as well as Shineju in Korea, to conduct international remittances. Yet Shanxi merchants remained traditional agrarian-era businessmen, with all draft banks tightly controlled by their headquarters in Shanxi. As insular family enterprises in an inland region, their refusal to modernize into joint stock commercial banks sealed their demise amid the tide of change. Now that we have found out the context, please tune in next episode to learn about how exactly Shanxi draft banks fell and what that meant for China. Again, don't forget to like and subscribe.